Back in 1907, the US economy was on the brink of catastrophe. It was again going through another banking crisis that was about to destroy the entire country. That's when Wall Street turned to the most powerful man in Wall Street to save the US economy. If it wasn't for JP Morgan, it would have turned into a catastrophe for the US economy. The US government didn't like the fact that one man had so much power over the entire economy. That's when it decided that the United States needs a central bank. Over 100 most influential people in the United States got together in a meeting in Jekyll Island and decided to create the Fed. It became the most powerful bank in the entire country. I mean, it had the ability to do something that not a single bank in the country back then could do, and that is printing the US dollar.
So we as a central bank, we have the ability to create money.
Without it, the United States probably wouldn't be the superpower that it's today, because it played the most important role at making the United States such an economic power. However, in 2008, something so terrible happened to the US economy that it was about to crush the Fed. It wasn't prepared for it.
Now traders are standing there watching in amazement. I don't blame them.
Some people already forgot the fact how terrible the 2008 financial crisis was. I mean, it literally put the entire US economy on the line.
This could be the most serious recession in decades.
Since the rest of the world depends on the United States and the dollar for global trade, saving the US economy literally meant saving the global economy. This is when the most powerful man in the world back then, the chairman of the Fed, Ben Bernanke, decided to do something that the Fed has never done. You could say that this was the beginning of the end for the United States, because this is when the United States got hooked on free money. The Fed lowered the rates from about like 5% to literally zero. But guess what? That didn't really help. It didn't really stimulate the economy to grow again. Investors were afraid to spend. The US economy didn't just stop growing, it was literally collapsing. The 2008 financial crisis will go down in history as one of the worst crises in the history of the country. That's why the Fed had no other option but to take extreme measures, which is why it decided to buy trillions of dollars of mortgage-backed securities and treasury bonds. In other words, this is when the Fed decided to inject the economy with trillions of dollars. It was a really dangerous move because it could easily spike massive inflation across the country and devalue the dollar. When the economy will start growing again, when that $1 trillion injection into the economy will create that boost, the Fed will slowly start selling all of those bonds and eliminate all of those extra dollars from the economy. However, when it started doing that, another crisis hit the economy and the rest of the world.
China has identified the cause of the
mysterious new virus.
First U.S. case has been detected.
China is urging its citizens not to travel abroad.
I have today declared that the coronavirus presents a public health emergency in the United States.
The global economy was yet again on the brink of catastrophe, including the United States. And because the US experienced not that long ago the 2008 financial crisis, it knew that if it's not going to take immediate actions right now, the crisis could actually prolong much longer. Especially since the Fed already had an experience by injecting trillions of dollars into the economy through purchasing mortgage-backed securities and treasury bonds.
Not since the Great Depression has the federal government stepped in to help a failing financial institution in this country the way they did over this past weekend.
The government issues an IOU called a treasury bond. Then the Fed is going to purchase this IOU from the government. That's how the government receives that cash. Let's say it's a $1,000 bond with a 5% yield. So when the Fed is going to purchase this IOU from the government, the Fed has to pay the Fed $1,000, including $50 a year for just literally borrowing that money. Now, the government can spend that money in forms of building infrastructure projects, for example, or just distributing that cash to people in forms of stimulus checks like they did back in 2020 and 2021. This is why the economy did not collapse, and that's the reason why the stock market was booming in 2020 and 2021, especially when we had that crash just when the pandemic started. If you're investing in a company, all you want is that to see that the stock price is going up. And the reason that the stock price is going to go up is because the company is making money. So When we had an inflow of so much cheap money into the economy, everyone was making money. That's why the stock market was booming. This was literally one in a lifetime opportunity. But when you have so much cheap money into the economy, there is a huge price tag that everyone will pay at the end of the day. When so much extra dollars suddenly enter the economy, the value of existing dollars in the economy will drop. That's also known as inflation. There isn't a single example that I can think of when the government suddenly started printing so much cash and started injecting it into the economy, and that did not create massive inflation. I mean, just go back to the history and you will find multiple examples when that created massive inflation that literally destroyed their economies. I mean, the Weimar Republic back in 1930s is a great example. Or the 2006 example in Zimbabwe, when the government suddenly started just printing just trillions of dollars to pay back its debts. That's why it created such an inflation that it just destroyed the economy, and they're still suffering the consequences of that crisis until today. But why that didn't happen to the United States? You see, the US economy is not just a random economy. The US dollar is the global currency reserve. This is the currency that the rest of the world uses in order to trade with each other. So, the United States has the ability to export its inflation to the rest of the world. This is why when the Fed started just printing trillions of dollars, and all of those extra dollars didn't really create such a huge inflation that it's supposed to create. Yes, inflation got out of control. It almost reached double digits, but that's nothing compared to what could happen if another country did the exact same thing that the United States did. But it doesn't really matter how powerful your economy is. It doesn't really matter how powerful your currency is. You can't just literally print your way out of a crisis and just forget about it. There is a price for everything, which is why the Fed had to make an important decision. Save the economy and stop printing money, or keep printing money and let the stock market keep booming and investors make a lot of money. But what's the point of all of that money when at the end of the day, the value of your dollars will become worthless? That's why the Fed made the most rational decision it could. Save the US dollar. And that's why the stock market collapsed. It literally reached a rock bottom in 2022. If you go back to the end of 2021, when we just had rumors that the Fed could possibly hike the rates in the foreseeable future, those rumors alone already destroyed some of the largest companies back then. And when the Fed actually raised the rates in the beginning of 2022, just go back and take a look at what happened to the market. Some of the largest companies literally declared bankruptcy. All of those companies that did not have strong foundation were vanished. And the worst part about it was that when we had some of the largest banks in the country who couldn't stand the pressure and had to declare bankruptcy.
The Silicon Valley Bank collapsed on March 10.
This morning, First Republic Bank has become the second largest bank failure in U.S. history.
Everyone at this point was convinced that this is the time to pay the price for all of those cheap money that the Fed printed during the pandemic. The United States has the ability to borrow much more money than any other country on the face of the earth. But sooner or later, it has to pay the price for all of that debt. While everyone was blaming high interest rates for the collapse of the stock market, there was something else that was happening that actually created all of those bankruptcies. Inflation was so bad in the country that the Fed decided that raising rates alone was not enough. It was time to get rid of all of those bonds that the Fed has purchased during the pandemic. This was literally the best way to actually decrease the number of dollars in the economy by letting all of those bonds to mature. In other words, the Fed started selling almost $100 billion worth of these bonds every single month, which was one of the main reasons behind all of those bankruptcies. Even at that rate, it would take the Fed over 8 years to get rid of all of those bonds. You see, when the economy starts sliding into a recession and stops growing, unemployment starts rising. That will result that people have less money to spend. And when people spend less money, that results in less sales for all of these corporations, which means they will be making less money. And when they're making less money, that will reflect in their stock price in the stock market. At the end of the day, no one has as much data as the Federal Reserve. So here's what they're trying to do. It's trying to reduce inflation without causing a recession. Of course, an economy is not really a reflection of the stock market, but when the economy slides into a recession, then unemployment rises, and that means less profits for all of these corporations. So a stock market crash is inevitable. Now, if you have watched the latest press conference for the Federal Reserve, Jay Powell said that the Fed is not going to raise the rates yet again.
Today, we decided to leave our policy interest rate unchanged.
That's really good news for the companies because higher rates means that it will be more expensive for companies to borrow, which means that there is less money for them to invest in new projects, which means that they will be making less profits. But the best part about this press conference was that Jay Powell actually hinted that the Federal Reserve could actually start lowering the rates as soon as 2024. Of course, no one is expecting the Fed to lower the rates to 0% like they did in 2020. That's not happening in the next 2 or 3 years, or maybe even longer. But the fact that they could actually start already lowering the rates means that it's good news for the companies. The cost of borrowing money will be cheaper, which means that the stock market will yet again start growing much faster than it's growing right now. 2023 wasn't really bad for the stock market. If you look at the numbers, the S&P 500 is already back to its pandemic all-time high. And if you take a look at Apple, for example, it has restored its $3 trillion valuation that it once reached. I mean, that's really good news for Apple investors. So if you're holding Apple stocks, congratulations, especially if you compare the United States to the rest of the world. Like, look at China, it's on the brink of catastrophe. Europe is still trying to deal with Russia, and Middle East is in fire, while the United States is yet again ahead of the world. But that doesn't mean that the stock market won't collapse. This all could be an illusion to distract us. I mean, if you take a look at this S&P 500, you will find out that the top 7 companies in the S&P 500 literally represents over 25% of the entire S&P 500. And the S&P 500 are the 500 largest companies in the United States that literally represent the US economy. So when we have just 7 companies actually representing a quarter of the value of the entire S&P 500, that is something to worry about. Yes, they are doing great. Tesla, Apple, Amazon, Google. These companies actually have like billions of dollars stashed somewhere in their bank accounts. That's not the case with the rest of the companies in the S&P 500. Check out the top 7 companies and you will find out that most of the S&P 500 are suffering. If the Fed actually starts reducing its balance sheet and gets rid of all of those bonds that it purchased during a pandemic, all of these mid and small cap companies could start going bankrupt one after another. And remember that Fed still has almost $8 trillion worth of these bonds to get rid of. We don't really know how long it will take the Fed to actually sell all of those bonds, but the Fed has to do that, especially in the next few years or probably in the next decade before another crisis comes in. Because if another crisis comes in and the Fed has such a huge balance sheet, it won't be able to solve that crisis by printing money. And that is an important tool in the Fed's hand, which is why it will actually start sacrificing all of these companies and start selling all of those bonds. So how many companies will survive? We don't really know. Will there be more bankruptcies in the coming future? Most likely. So while there was a 2022 market crash, that's not the entire price that we have to pay, because the price that we have to pay for printing so much money is around $8 trillion right now, and we will be paying it over the next decade or so. The best case scenario right now looks like this, when the Fed will start cutting the rates over the next 2 or 3 years and bring them down probably like 3% or 2.5% while not really causing massive inflation. And at the same time, it will reduce its balance sheet to a sustainable level over the next few years. So will the market crash again in 2024 or 2025? It really depends on how the Fed is going to manage this crisis. And now it's your turn. Let me know in the comments below, what do you think about this? What do you think will happen to the market next year? Thanks for watching, and I will see you in the next one.